There you go. All right, so hello everyone. All right, so let me go through what I'm looking for today. Um, on my journal, I wrote that I want the daily chart to go lower. See, we've really had a hard time going higher, and we rejected that Thursday high there, and we have lots of liquidity down here. It just looks too clean, so I want to see. I think it's reasonable to see a run down there. The only thing I don't really like is how the S&P 500. Sorry, I didn't mean to say discount. So I need to see some sort of retracement. We've started getting that. We're moving away from the low and maybe moving up to some higher PDA rate. So um, we're like doing that right now. But the S&P, what I would want to see is the Nasdaq be ahead of it. So like yesterday, the Nasdaq was better for buys. You see how we ran up above the weight higher than the day's high. And we could see that intraday with the way it was moving, with the way I was like more excited. I want to see the same thing this morning. So I want to see Nasdaq show. You can see it's sort of showing more willingness to move away from at least the day's opening versus the S&P, which has not moved as much uh, lower than the day's opening. Like Nasdaq seems to still be pretty excited, just barely going above the high here at 8 o'clock versus the S&P going a little bit higher. It seems like, right? So the Dow is, I don't really care what the Dow does, but the obviously the Nasdaq is, I believe, in sync to be going lower. So I think we are good to look for shorts. And then the Japanese yen is just absolutely just terrible. Having a heart attack. I don't want to do anything on this one. So there is the Nasdaq that I'm looking at, and that's it. um, so we ran into the fair value gap at 9:30. So I'd like for it to maybe give some more premium. Maybe try and come back near this high one more time, or fail to get above it, or get above it, whatever, and then see more displacement. But I like this dealing range. So anything above, in the 50% there, in that in that premium, I would like. Take off the ticker. Oh, you got should be getting the dog this morning. So I will probably be out of here a little early. Like by 10:30, I have to be gone. Then I'll probably take my. I might continue trading after that, but I won't be here on stream. Because at 9:30 range there, I want to just study kind of both ends. we're gonna consolidate inside this probably, and I think if we, obviously run up above it, it will probably signify liquidity to get into the market for longs, because people will think it's a buy day, and then I'm thinking of taking it the other way. That's what I would like to happen, ideally. And now I'll measure the um, regular trading hours gap, watching for that 50% or anything in between 25-50%. I would want to act as resistance today. We've had the past 2 days fill the regular trading hours gap. So therefore, if the algorithm from 2009 that backtests the idea that regular trading hours gap fill, and it says that it only fills 20% of the time to 50%, then I mean, I can't see how it's going to be the third time in a row and it's going to fill, right? And that's some drama going on with ICT. He made a claim that 70% of the time the 50% level of the regular trading hours gap fills, which is not backed up if you look all the way back to 2009. But I would say this year it is quite happens quite often. We're seeing a little bit of tough time to run higher, and I think it's just accumulating more orders, so more accumulation. I'm looking at this consolidation, and if I look at the hourly chart on the bigger picture, let me delete the drawings. Well, there's nothing I can really tell on the regular trading hours. It's just kind of consolidating, except that there's liquidity down here. But it just looks like we're in the middle of the delivery lower down to these lows, right? This hourly candle's closing in 10 minutes, so we could open up the next one and immediately rebalance. If that's the case, I'm gonna mark this low there, and they might also just keep going and leave a fair value gap too. Which in that case, there would just be no trade. We do have news. We had the interest rate. Oh my goodness, they lowered it by in Canada 50 basis points. That's pretty intense. Um, that means the bond prices are going to be through the roof, or should already be through the roof. But anyways, where was I? Yeah, Wednesday. There's existing home sales at 10, and then the press conference, which I think is Canada, so I don't know if it's going to cause that much volatility, but maybe. Yeah. I see 945 reserve volatility. And a little bit of volatility. I don't know, not really. Except, let's see what the CAD looks like. Just curious. Oh wow, look at that. And we are getting more expensive. That's good. The more expensive it gets, the more money you make from trading, because I trade in US dollars. So that's good. Just the 15-minute chart, it just looks hard to frame, I guess, up close candles because we had so many down close candles. I would like it to just kind of like just slip and fall, right? Like it seems like it's wanting to wick higher, but in nice order flow, like perfect delivery. I mean, I wouldn't have wanted the 6 a.m. or I guess the 8 a.m. hour to already deliver lower. Maybe consolidate a little bit more up here because trying to frame a move back up into here and then immediately back down. Again, we could get the immediate rebound. So let me see how that. I'm just trying to visualize this in my head on the higher time frame, the idea that I'm trying to do. And honestly, there's way too many things on my chart. Let's just be honest. I gotta delete some things. I don't like the new week opening gaps, but they're important. Like, it just bothers me sometimes when they're on the chart. So we'll just reduce the opacity. There you go. That actually looks a lot better. This is way too cluttered. All right, so yeah, I mean, we're not gonna likely get, I guess, that large candle that. So, but let's just say we come back down and we start to close down here, then I could look at that wick inside that wick 50% maybe, but I don't know. Also, this is quite a large wick, so I can also just completely ignore it, and let's just say I ignore it, right? Then this is a nice short-term high that looks juicy, and it would be right into discount or sorry premium. It doesn't have to get all the way up to the fair value gap one more time, but I'd like to just see again some form of run on a stop, stop run that leads into a discount or premium, sorry, premium. Which I'm in a lot of trouble doing that. And also, I saw the dollar was absolutely going crazy. I mean, this is the October delivery. It has not stopped going up. I've been obviously I think it's pretty easy to be bullish on dollar, but I guess it just confirms a lot of the fears that I had about the world. I mean, usually whenever there's talks about the war or fears, the dollar tends to, well, not tends to, always goes up. Like, I look at October 7th, it did not do that, but as stuff got more serious, and now it seems like it's on its way up again. I don't know. I don't think we've seen this much volatility, like, or bullish price action for the dollars in a while. Like, I don't think I've ever seen that much since I began trading. I mean, 30th September, that's a big week compared to last year. Last year in July was like there were fear of a bigger war sparking out in the Middle East, and it went up quite significantly. No, no, sorry, it was Ukraine. I'm pretty sure it went up quite significantly. But this is insane. Like, there's some major money printing or something going on, or not money printing, but something going on. Okay, so we're approaching our premium. I don't really see a good breaker. Like, if I look at this price action, there's no obvious breaker. So I'm not. As soon as we get up here, I'm not going short because there's no real breaker that I can trust that I can see easily. But I'll want to wait a little longer for more information before I do anything. Let me just open up Top Step. Okay. Okay. All right. Let me just copy over some of these PDRs. I hate getting into a trade and nothing is ready. And I'm just gonna have to do all the annotations while the trade is starting to play out. I hate doing that because I'm trying to focus on the trade and then I'm I'd rather just sit back and relax when I get into a trade. If we don't go up and we continue going down, once we get beneath these lows, if we don't start to displace past them, we don't like continue to expand lower, and we just quickly touch down here, leave some nice fair value gaps, and start to displace higher and inverse these fair value gaps, then I would actually be interested in longs because I think that there's reason to come back up into here, the premium area. If we were to go to a new discount and make new lows, I don't see reason to come back up, um, unless we're trading to these relative equal highs and maybe this high returning to the 15-minute fair value gap. So I wouldn't be expecting a retracement. Um, I want to really see it go down the speed here. So I'm going to note that because it is a change of bias a little bit. So here we go. We sweep sort of the lows of the consolidation. Now I'm just waiting. There's nothing starting yet. We've left a little wick. But I'm also examining the 5-minute candle, and the reason I don't like this is because I don't expect the next 5-minute candle to go all the way above this 10 o'clock candle. So maybe if it settles down a little bit and it creates a smaller 5-minute candle that can be used as an order block, that could be nice. What I would expect is what could happen is a very bullish price action leaves a large wick. If that's the case, I don't know if I would still be one to long up here. I'd rather position myself sort of like in this area down here. And if we can get another candle close in this area, it can be a down close candle, then I could use that one as an order block. We see here it is back making new lows now, so we'll see if it continues to reject them or it moves through them. It seems like it's going to move through them. And this is why I didn't want to just buy turtle soup, right? 5 second looks no. It's really yeah, it's not going up. Like we go no, ideally I'd like for me to just be done for the day or to keep trending lower down to these lows and there's just no more trade. Right. It just so happened that the retracement into premium was during the 9:30 open and I couldn't position myself for that. And that's okay. We didn't get the run up above these short-term highs. There was no clear breaker. There's no fair value gap or inverse fair value gap. There's no way I could have tried to capture this move lower without doing something, completely arbitrary and different from my model. Now, I'm still gonna stay and study it because if we, I still think it's possible because we have a big lack of premium delivery this morning. It could start to move back up. But ideally, I don't think it should. Let's look at this new hourly candle. So we've yeah. Well, in the first 6 minutes, this candle we've delivered lower, so this is already a lot of movement. And there's the previous day low. And she continue going down to the south side here. This is a significant low in proximity to that low. And then next targets would be down here, but it might run out of steam before it even gets to this low here on Thursday. Or Friday, sorry, last week. Hello, Neko. You're I was just studying the delivery. I'm a little late, but I was studying the delivery lower. I wanted to position myself short, but the move back into premium happened at 9:30, and I wasn't able to position myself for it in a way that's within my model. See, there's no like, I wanted to see 955 run above this short-term high, and then potentially get back between the 25% and 50% of regular trading hours gap. Doesn't necessarily have to go above this wick back into the fair value gap, but instead it just kind of left and then started to displace. And there was no inverse fair value gap or institutional overflow entry drill in this rundown for me to capture. So it's a bummer. I have to kind of, you know, do nothing, but there might maybe be a run higher here, like retracement into the morning range because this hourly candle has moved so far below and there's still 15 minutes left to it. We've taken sell side here. We're still in this fair value gap, so um, it's possible we get retracements and then maybe later in the day is more possibility to position short, but I have to go and like by 10:30. I probably am not going to be doing anything. I like longs here though. Like I like this inverse fair value gap. I'm tempted to try it, but it's not my model, right? There's no breaker. There's no 5 minute um, short term low. I want to see price retrace higher into the range off of that and not revisit this low for a little bit. I'd look for like something maybe like this, maybe back in the week opening gap. My baby food model would have said 12.5 points. This is what I was doing a year ago. I was just going 15 point stop loss. First 5 minute short term low. As soon as it gets hit off after the 9:30 opening range, I just take the first fair value gap the opposite direction. 12.5 points, 15 point stop loss, and called it baby food. Interesting. The Dow is going higher. Not very. Gold is going lower. Yeah. Yeah, I used 30-second too. Actually, it was pretty much Cameron's model. Yeah, except the take profit and stop loss were different. And I would start at 9:45 instead of 10, and it would only go till 10:30. So I had literally just 45-minute window to place a trade. And I look back on that model, and it was very very simple. There's lots of times where like let's say price would have turned and then now it's going lower, where I would have already like been out of the trade and in profit, and I get like 4 or 5 wins in a row in the trade every day. And yet my bias could have been off. I could have been getting long at the wrong time. But because such a small amount of points, it didn't matter as long as it just retraced a little bit, you know, and I was right for just a split second. I would benefit, right? So it helped me kind of build confidence and taught me that the simpler you keep it, the better it is. Now my model is pretty simple. It just needs to be in the right time and the right place. And well, today it did not give me the move lower this morning that would lead me to my model. It might still give a nice run higher. Sam, I used to be a copy paste trader a year ago. Never considered overflow or balanced price range. Yeah, there's nothing wrong with that. Like I've thought about going back to it a couple times, especially when the market is like this, ahead of elections. But I don't think that there's uh, like for right now I'm doing well. Like I'm in profit right now. I'm doing well. So I just have less trades. That's all, and I'm okay with that. I'd rather just wait it out than try and switch my model and do something else. I want to see that down close candle support price there, but it doesn't show at 10-12. So if price reaches beneath it, that to me is very oversold. It doesn't look like it wants to make a new high. Maybe. Stop would be at break even. For this for a theoretical trade, I'd have break even stop here. And yeah, no, it really doesn't look like it's gonna go higher. The way it closed, like I would want it to wick, not close beneath the body of the order block. It could still work, so let's see. Okay, so now I want to see, like, I would just close the trade here. Now I don't know if I would actually, because if I'm in the trade, I might be feeling emotion, but just off logical, analytical mindset, I want to close the trade here because I'm framing. Okay, maybe we had this initial run higher. If I wouldn't want to get trapped thinking that this is going to go up and it's actually just inducing buyers for liquidity, and it's going to come one more time, run back down this low. But I'd like to do it. I'd like for it to do it pretty quickly here. Drop down very quickly. Maybe get near this low, leave some SMT or leave the breaker, whatever, and then it would demand a lot, but then maybe it could, you know, start to run higher. So this was the new home sales delivery, right? So this could be the Judas swing lower. I just don't want to be buying it off the first initial run higher. I want to see it liquidate, like kind of like what the S&P is doing. So it might leave SMT instead of actually leaving a breaker, and it would be a mitigation block. So we're gonna have to see what the 5 minute looks like. Yeah, so like like I had talked about, right? Like I wanted to see down here during on this 10 o'clock candle, if it had closed, maybe like it had closed down here, pretend like the red is the body. I said I wouldn't want to see the 10 candle go up because it would demand a lot for it to be an order block and it would make an order block inside the fair value gap. So it's the same thing kind of here. We've had this initial up close candle. People might think this is an order block. I don't want it to be the bodies as long as price kind of goes beneath the bodies. I would see that as the same thing as a breaker formation where we go up, down, lower like that, where this is the wick low, instead this is the body low, and then this is a new body. I don't care what the wick does, but that would be enough for me to consider an oversold situation. Um, and even better if the S&P has S&T with it and it still wants to go higher, because we did take liquidity on the S&P too. We took more liquidity, in fact. So now I might be willing to long, but it's oh no, it's already taken off. I would have wanted to buy it down here and constantly encroaching in that gap or inside this smaller gap. I'm getting a call. Well, no, looks like I can stay for longer because we are not getting a dog. I'm not worried about relative equal lows because we already took liquidity. So I'm to me it's already in the reached the discount. So like we've already taken these lows, and this I don't really care about it. We've already taken down here, so that was my main concern. And since we've already overextended ourselves so much in the 10 o'clock hour already, and there's still 36 minutes left, uh, I think demanding it to continue going over is asking for a lot, and that's why I'm willing to uh, try longs. Now, I might not have positioned myself in the best way. Like I would have wanted to buy down here, but I wasn't able to click the buy button, fast enough, make that decision fast enough, um, and price took off. So I saw the 30-second gap, and then I'm like, okay, I'm gonna try the 30-second gap. So I might not position myself very well, but if that's the case, I accept it. It's okay. So I've already been spot on with the delivery so far this morning. So if it's just a small mishap and I did not position myself well, then I accept it. It's okay. Looks like I'm gonna get stopped out because this gap is not being respected yet. It inversed it. The thing is, it could still go up here, which sucks, but I I still have a little bit more money to, like, a little bit more of a threshold to lose before I have a manual lockout. Not a manual lockout, but I have my own lockout rules, so I have more margin to lose, or to play with. But I'm gonna really try and wait for like the best case entry, which would be near closer to these lows. Shit, I closed trading view. Oops. I might try it again here if it gives me a run back into this inverse valley gap. I got stopped like right there anyway, so it'll be like a small slippage. But I don't think it's gonna come back. It's probably gonna keep going up. I don't do it because right now I'm like obviously I missed it. And like I said, I positioned myself wrong. I don't want to be emotional and then give myself another bad entry. So I'm gonna remove myself from the chart and come back maybe like 10 minutes. If there's something else I can take, then I will try it. But I don't know because I'm thinking of longing the 1027 gap, but it's a large gap and I already lost. Right, so another stop of 20. I have 15 points left to play with, so like it would. I can see how it might come down and fill this gap. maybe even back down to these lows one more time. But ideally, I wouldn't want it to. I would want this 50-minute candle to be used as an order block. Yeah, I'm gonna just remove myself a little bit. I'll be back in like 10 minutes. Oh, I'm back. I'm gonna try it again. So I was just idly standing by, but try going along one more time. And we'll flag up here maybe. Uh, I was yeah, upstairs dealing with a little bit of a issue with getting a dog. My mom was panicking a little bit, and I started seeing. We were done the conversation. I was just waiting upstairs. Then I started to see this, and I decided, okay, I'm gonna come back. So now I'm back, but it's not running. It's just doing the same thing. It's worrying a little bit that it's closing this far out into the gap. Down here, I wanted maybe this to be a breakaway gap, so I'll probably close this uh, if it stays down here for another couple candles. Like it needs to start, running now, so I'll probably start to move my stop up and kind of tight. I understand it might lose, and I'm okay with that. Let's do like 50 ticks. Yeah, I'm using a funded account, Express account. It's disappointing because I this trade here would have been I would have had a payout. Um, but I guess alright, I lost now. So I should be still up $800 is fine, but I've had a lot of trouble. Like I started off well, and then these two trades should not have happened. Like this one, I got stopped out by the tick, and it went my way. And then this one was same thing. I got stopped out by the tick. Um, and then I ended up the week profitable. Over here, I ended up this week profitable, and then I shouldn't have taken anything. I shouldn't have done anything Friday, but I had ended up doing it, and now I've been just sort of waiting, and I've been doing it well. I've been responsible, but you know, it sucks because this morning, like I knew that going long here was okay. The inverse fair value gap occurred. I said I wanted to wait. I don't trust it yet. Then it started to come back down, and I talked about the 5 minute candle here. I would want to be a buyer underneath the body here. So it came down beneath the body. Um, and it kind of took off. I didn't have a chance to make the decision to buy at that area. It just kind of took off. Didn't give me the inverse. And I bought the strength, and it came down a little too far back into this gap, and then I got stopped out by a couple points, and then it went the way 80 points. It would have brought the account up to almost $3,000, which would have given me a payout. But it is what it is. I know that in November at least it will be much better because there's going to be a lot more volatility, and I'm overthinking it too much. So I'm going to get off the chart now and get back to studying because I have a lot of studying to do. And I'll try and forget about today and come back tomorrow on a better mindset. But yeah, oh wait, just in case, let me lock out the trade. There you go. See you tomorrow.